Well, the most important update from real estate came out today, and of course, it's price. Right, we're starting to see the prices continue to erode. Now, we're talking about real estate. Always, this channel is about real estate from a long way perspective. Right, it's not going to look at real estate from the perspectives that you hear out there. The most important, again, is from a long way perspective. Okay, here's the chart. This is Canada new home prices month to month. And the most important, I condensed it into the monetary wave. So for new people, the long wave, it's like a sine wave. The long wave began in 1946, peaked in the 70s, and it's on its down wave. During the down wave, the economy historically has financialized again, and its product, which is credit, its price falls, which allows the process of Ponzi finance and asset bubbles, right? That causes economic winters, right? We're still in economic fall and we're waiting, but the indicators are pointing to economic winter. So the falling price of credit, and we can see three previous peaks here. Most important thing I'm looking at this chart is that the bottom and the trend line out until 2023 has been broken. And that just confirms that the bear market is upon us because it's broken through, but it's come back to prices and hit it and gone back down. And also the red trend line that it's pointing downward, hitting that continuous downward trend, right? And trend lines are very simple. The more points that it hits, the more significant it is. It just confirms the trend. And a trend is based on supply and demand of the market. So it's telling us, articulating a message or a story to us that prices are headed this way and there's no change. And how will they change as interest rates rise and more people impacted the rise in price of credit? And the concern is, of course, that we're on the point of deleveraging. When deleveraging starts, then that will be a confirmation economic winter is upon us. Now, are there signals there? Yes. The long wave model, as Schumpeter alluded to, was the long wave was turning down, the real estate cycle and the business cycle. Now, that was in the 20s. The long wave peaked in the mid-teens, like during World War One, sorry, and then it had its downward trend, falling price of credit, speculation, credit, unsustainable, unproductive credit was accumulated. And during the Great Depression, it's just to purge that and clean it, right? That's why you can't have a boom without a bust, and you can't have a boom again unless you had that bust, right? So boom, bust, boom, bust. But once this new cycle turns up again, then rise in interest rates will prevent any kind of speculation because it doesn't have the ability to leverage anymore. So what we're looking for is the leveraging process to now start to reverse. People are still, or Canadians are still leveraging, but it's at a slower rate. And I believe the monthly numbers will continue to worsen because rates this morning are still even higher. And that means more and more people have difficulty to acquire a loan and to purchase a property that's overinflated to begin with, like 50% across Canada. Yes, I understand Southern Ontario and Southern BC distorts the numbers across the province, but in the end, it's going to impact the general, and that's why I'm saying 50, probably greater in Southern Ontario and BC. And I know where you're saying impossible. They won't let it happen. It can't happen. Do you understand the implications? Of course they do. I've read every book on manias in history, but we've tried to warn. There's numerous people like myself trying to warn the public, and well, you're wrong, and it's still gone up, and they didn't want to look at the fundamentals. Now the reality is going to hit, and when deleveraging starts, it'll probably be forced upon you by the economy. Not so much it was a choice, and that's why the general advice I'm giving is, if you start to deleverage at this point it would be prudent sense, right? Because the idea is that if it's your choice, then you can pick and choose. Usually, deleveraging is forced through a lot of people losing their jobs, or they can't reacquire a loan at much higher rates, and they have to lose. They will lose their property, so they're forced, right? They're cornered. Anyways, that's the most important thing today. I've said I've tried to keep it short and simple and to the point. Nothing in the models have changed. They're bearish. By the way, if you want to have access to the models, you should subscribe on my Substack account, and it does allude, according to which I built over the years, 23 years in the investment business, 10 outside of it, and it alludes to allocating the portfolio in a where the capital is safest or the trend is positive or negative. Obviously, the model is extremely bearish on real estate. I can't see anything positive real estate for a decade. Simply, the demographics won't be there. They're too expensive. The price of credit is rising. We have a sovereign debt crisis that will cause higher rates in the future. Specifically, that's post real estate bubble. The economy is still turning down into 2024. Again, it's the Kondrativ, the Kuznets, which is real estate, and the business cycle turning down. And we're going to see that clearly by this time next year. More than likely, we should start seeing it in the early 2024. As always, I appreciate your feedback. It's just enough, short enough, impactful enough, educational enough. And again, if you want access to the models on the Substack account where you can find it, I have links on YouTube here to my Substack account or the website. The website is just general information. I go into more detail, more written aspects of the long wave and how to prepare. And one thing probably people have asked me over and over, what's the advantage of the long wave? It's like having a satellite view of what's coming. And it we can see, for example, or understand from using history as an example to forecast the future. We know political unrest will be rising. We know markets will turn down heavily. We know people will be deleveraging. There will be a massive creative destruction over every industry because we can't afford it, right? All the systems will have to be restructured. But technology, that's the only area where we can uh, increase wealth into the future. And that's where some leaders in the future will force or help guide Canada, Europe, United States into the future. It's technology. That's what got us to this point in history. There's not much else we could do with the demographics or unsustainable big economy or large governments. The end of big, as people have called it. And one last point, just to remind people who haven't heard it, this emerging Kondrativ fifth wave that's being built, that's empowering you, it's decentralized, right? Nothing will be more productive and create real wealth than local production. And it's a converging information revolution, the internet, AI, 3D printing, molecular manufacturing, um, solar, small scale nuclear. I can go on and on about all these technologies. It would just make sense that, why we manufacturing things in China where we can manufacture cheaper. And in Canada, definitely, simply because the resources are here, all types of resources and the technology, how productive it is. So that's the good news. We have to go through this challenging phase, and this is where the long wave will help you get through it. As always, we'll talk soon.